The macro catalyst and liquidation cascade. The digital asset market is experiencing a significant liquidity flush, driven by macroeconomic risk-off sentiment and accelerating institutional outflows. Over the past 24 hours, the total cryptocurrency market capitalization contracted by 3%, falling to $2.54 trillion. This downward move was catalyzed by escalating geopolitical tensions after reports of U.S. infrastructure smack in the Strait of. The threat of prolonged supply chain disruptions has forced investors out of high beta risk assets. This sharp spot market sell-off caught leveraged traders off guard, triggering an estimated $897 million in total long liquidations. This represents one of the most severe deleveraging events observed this quarter. Bitcoin structural breakdown and ETF exits. Bitcoin has formally violated critical psychological and technical support, dropping below $73,000. This move extends a structural downtrend that began after Bitcoin failed to sustain its early May high of $82,500. The primary driver behind this price decay is an aggressive reversal in institutional demand. On Wednesday, U.S. spot Bitcoin ETFs recorded a massive $733 million net outflow. BlackRock's IBIT ETF alone accounted for $528 million of those exits, marking the second-largest single-day outflow in the fund's operational history. With BTC breaking beneath its short-term moving averages, the next primary technical downside target sits at the major $70,000 support zone. Ethereum and XRP technical deterioration. Ethereum is exhibiting even greater relative weakness, losing the foundational $2,000 support level after a 4.8% overnight drop. This price action reveals a stark divergence between the derivatives and spot markets. While Ether futures open interest surged to a record high of 16 million ETH, spot demand remains non-existent, capital flight is highly evident, as spot Ether ETFs have shed $570 million since May 11th. Simultaneously, XRP has broken below its critical $1.30 floor, trading down near 1.28. While the breakdown was fueled by a sharp unwinding of derivatives longs, on-chain metrics show a silver lining. Whales have begun moving large quantities of XRP off centralized exchanges. What do they know? Hinting at spot accumulation during this capitulation event. Market anomalies, XLM and multi-chain stablecoins. Despite the broader market capitulation, a few notable anomalies are defying the trend. Stellar XLM decoupled from the market, staging a 14% counter-trend rally to trade near 17 cents. This sudden influx of buying volume followed an announcement from the DTCC. They outlined integration frameworks to deploy tokenized real-world assets onto the Stellar network. Concurrently, a massive fundamental shift is occurring in Web3 infrastructure. Jack Dorsey's block has integrated USDC stablecoin capability into Cash App, opening access to 60 million users across Solana, Ethereum, Polygon, and Arbitrum. This multi-chain stablecoin pivot marks a profound strategic evolution for the historically Bitcoin-centric firm. Data synthesis and outlook. In summary, the crypto market is facing a dual threat: micro-technical breakdowns and macro-geopolitical strain. The key to a market bottom relies heavily on U.S. spot ETF outflows stabilizing and the crypto fear and greed index recovering from its current slide into deep fear territory. The next 48 hours will test whether $70,000 buyer liquidity can absorb this structural spot selling. For data-driven market updates, make sure to subscribe to the channel and hit the notification bell. Track the macro trends, manage your downside risk. We will analyze the data again in the next update. Disclaimer: this video is for entertainment and educational purposes only. This is absolutely not financial or investment advice. Crypto markets carry extreme risk. Always do your own research before risking your hard-earned money.